This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. Hey everybody, nice to see you again. It's been quite a while. I was in the hospital last week, so I do apologize for the lack of a video or streams. However, there's a couple things I want to go over. Um, I will be streaming, trying to do full time, but currently it still will be the Monday, Wednesday, and Friday from 9:15 a.m. to about 11 a.m. Um, I do want to make that Monday through Friday, so that will be the goal probably by the end of May. So hopefully you all look forward to those. Other than that, tonight we're going to be going over the data sets, the earnings, and doing a very quick technical analysis over the SPY slash the overall markets. And with that said, let's go ahead and jump straight into the data. Now, this week we do have some important data, but not a whole ton of data. So, for example, Monday, there's really nothing major. Factory orders doesn't matter too much. For Tuesday, we do have the ISM non-manufacturing side of the data. Last week we had the ISM manufacturing side, which did come in cooler. I do expect a lot of that same sentiment to carry over to the non-manufacturing data as well. So we will, see come Tuesday, but very likely that will be moving the market. Cooler data in terms of this should overall be bullish, as it should be pushing not the hawkish narrative, but the dovish narrative. This is something we've been talking about for a while, where even with the oil volatility picking up and with oil volatility picking up, that does increase short-term inflation. However, I'm still in the boat and in the camp that this will all lead to a very larger and greater deflation in the end. Um, I'll back to that point in just a couple minutes here when we go over the CME. Now for Wednesday, or let's see, for Tuesday, 11:30, we do have some inflation data coming out. I don't really expect anything major out of it, but it can be slightly hawkish, just you know, purely because inflation's not good, and if the Fed is expecting higher inflation from the oil volatility, then that will tick upward slightly. Not what I'm expecting though. I don't really expect it to be a major data set at all. Wednesday, 8:15 a.m., we have the ADP non-farm employment for April. So this isn't just the weekly, this is the whole month. Now, the forecast for it is expecting around 90,000, with last month being kind of a a messed up month for me between breaking my hand, going to the hospital and everything. I haven't been able to keep super close track of this, so I won't really make any statement on whether I think that's high or not. But overall, this should still be a lot closer to about 200,000 to 300,000 each month. So in regards to that, that's still coming in fairly low. Now on Thursday and Friday are the big days this week. So for Thursday, we have the jobless claims, which they did come down a bit last week. I don't really have much to say about that yet. I do need to look into the unemployment data this week, to really give you a better picture of what's going on with the jobless claims. But we do have the non-farm productivity quarter over quarter, for quarter one. That's going to be a very large data set. They're basically forecasting that the productivity has gone down. That should be a dovish data set, meaning that should be overall bullish for the market, bearish for treasury yields, unit labor costs, major expectation in the pull down. So again, that would be another very dovish data set. We do have some consumer data, or we do have some inflation data that day. Um, Again, I'm not really expecting the inflation data to really push the market um, to the downside or anything. That's not what I'm expecting out of that at all. Now for Friday, Friday's the really big, really big day this week. As we have the non-farm payrolls, the participation rate, the unemployment rate, and also the U6 unemployment rate. I keep calling it the U8 or the M6 for some reason. but it's the U6 unemployment rate, and this is a very, very crucial reading because it tracks the totality of what's going on with the employment from people trying to re-enter the market or the job market to um just current unemployed. It tries to piece together that entire picture. So if we see an uptick in the U6, that's going to be very, very bad. Overall, I'm not really expecting an uptick this month in the unemployment, based off of kind of what I've glanced at in April, with the continuing jobless claims, everything else. It does look like that the unemployment is still very high, but it doesn't look like it's ready to have that leg upward yet. I can be mistaken about that. We might get a 4.4%. I do not expect that at all, though. I heavily expect this 4.3% to pretty much remain intact. Um, if anything, it's the U6 that will get the slight adjustment. Now, after the unemployment data and everything today, or for Friday, we do have the Michigan inflation expectations and the consumer sentiment for or at 10 a.m. Now that data can be fairly important, but with the NFPs, with the unemployment rate and everything in the morning, very likely all of that data is going to trump anything that comes out from these Michigan consumer data sets. The only thing that I think might pull down the or be fairly dovish for the market is that the Michigan consumer sentiment is expected to tick down quite a bit. Now, when this is below 50, this is showing pretty much that it's a negative reading. Um, Forecast is still expecting this to go further downward. So even though the market and the Fed and everything is really trying to suggest that inflation's picking upward, we're seeing within a lot of our data sets that really that's not the case. We're having issues with hiring, we're having issues with a lot of consumer sentiment reports. Um, there's still a lot of issues popping up. So with that said, that's pretty much the data for this week. Nothing super, super important outside of really that Thursday and Friday data sets. Now, going over the whole conflict in Iran, um, obviously I've been out quite a bit this month. I mean, when I was in the hospital for 7 days, I had no access to my phone. So I really had no clue what was going on other than being able to look at the stock prices and make some determinations off of that, which was actually funny because based off the stock prices, I could tell that there were some new strikes going on in Iran. Funny enough, someone checked the news in the hospital and ended up being true. But besides that, this whole conflict is starting to close. Okay. There might be a continuation of strikes. There might be the strait being closed off again. I mean, whatever happens at this point, it really is starting to turn into that culmination of this war event. Um, whether it lasts days, weeks, months, that's still to be decided. But I do believe that the majority of this conflict is pretty much over, and the stock prices are really starting to reflect that. And I'm going to show that in a couple minutes here of exactly what I'm talking about. But expect that this war to start closing up very soon. Okay, and this is a big reason why I am shorting oil right now. I am expecting oil to really, really start pulling down towards that, 60 to $70 a barrel within the next, quarter, 2 quarters, give or take. Um, this week we do have some big earnings, but we're still, I believe, 3 weeks out until NVIDIA. So we still have some earnings that can move the market, but nothing that's going to absolutely, um, send the market flying or completely dropping. So with that said, let's go ahead and get into the earnings. Now, there is a lot of earnings on the screen here, but there's really only a few that really, really have to be focused on. So for Monday, we have Palantir after the close. I'm not going to really weigh my opinion on whether it's going to go up or down. It's not what I'm really after in this segment. Tuesday, we have Supermicro, so SMCI, AMD. MicroStrategy, so Master. Um, Big Bear AI, not one I'm really interested in trying to trade the earnings for, but I do have a position to, see this move up towards that $7 range. Um, so Tuesday, AMD and SMCI can definitely move the market quite a bit, especially AMD. I know AMD's been absolutely flying over the last few weeks, so definitely look forward to what AMD is going to provide for us. And I've been saying this about AMD for, almost 3 years now, that AMD is a miniature NVIDIA. It's not going to take long for AMD to start really shifting towards being more of a NVIDIA type company and gathering a absolute boatload of market cap. It's going to happen eventually. I was talking about this when AMD was 120 a share, and now it's 360 a share. So, um, yeah. Anyway, Wednesday we have ARM, we have AppLovin. Really nothing too exciting, mainly ARM, but I'm not expecting ARM to really move the market one way or another unless we see some, absurd deal that I don't see that happening. Thursday, we have Coin and CoreWeave, some other smaller ones, Rocket Lab, Sound, nothing really too interesting, but mainly it's Coin and CoreWeave. Now, I know CoreWeave has been pulling back ever since I do believe some of the deals with NVIDIA have been closed off, if I remember correctly, but that could be, entirely wrong. I'm not sure at this moment. But yeah, that's the earnings this week. Nothing super, super, um, you know, massive other than really AMD. Out of anything on here, AMD is really the big one. Now, getting into the FedWatch, and I'm not going to be showing for June. Again, there is not going to be a FOMC in May. Um, as far as I know, Jerome Powell is no longer the Fed chair, so they're going to have to get the new Fed chair and all that sort of stuff. I'm not really too interested in June, July. I'm really not wanting to look at any of those. What I'm really wanting to show you is that what the Fed is expecting out of December. Okay. Now, reading this is showing that currently there's roughly about an 80% chance that the target rate is going to be right where it is currently. So that's telling you that there's an 80% chance over the next 5 meetings roughly that we're just going to see pauses. I'm fully on board with that unless we start seeing the deflationary side. And this is where these two little columns come in. The 11.2% is seeing a rate cut. The 9.3% is seeing a rate hike. Okay, so this is the Fed basically saying that there's roughly a 10% on each side that we're going to cut the rates or we're going to be hiking the rates by the time it hits December. Now, with that said, we do see the cut still priced in higher than the rate hike. Now, why would this be the case if inflation is starting to come back? You do not cut into rising inflation. So if the inflation story is really true, then we would be seeing this hike odd probability being far, far, far higher. Okay. Um, I just thought that was interesting because this heavily shows that Fed is really, really paying attention to this deflationary side. Because again, after oil volatility settles, usually you start having to drastically cut your rates. Um, and that's just historically how it's been. So come December, I am expecting this rate cut to be much higher odds unless we see the narrative shift and we actually do see major inflation starting to kick in.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis tonight, we're going to make this fairly quick. A lot of these TA videos now, I'm going to start trying to speed through a lot faster. So here's kind of the things we're contending with here, and I'm going to turn off the moving averages and Bollinger Bands for a moment. But looking at the daily time frame, and this is correlating some of the weekly, so just to show on the weekly with the Bollingers and the moving averages, we're within the third week of the upper Bollinger on the weekly time frame. Um, Usually week 2, you get a higher high, and then you start consolidating downward towards the 5 mile, but that has not occurred yet. And since that's not occurring, at least so far in the overnight, it's looking like we're trying to push some new ground. So what I'm expecting is essentially an extension of the weekly upper Bollinger. So what this would mean is that we would have to treat this essentially like the week 2 of the upper Bollinger, where we see a higher high. From that higher high, we start to consolidate downward. Okay. Now, with that said, the weekly 5 mile is still currently at the 696, so we do have quite a long ways to go before that. Now, to correlate that on the daily time frame, that pulls our the weekly 5 mile towards this 20 mile range, which again, we have not tested the 20 mile in roughly a whole month now. Um, yeah, a whole month now. So this range is very, very due to start being struck. Okay. Whether that starts to happen this week, whether it starts to happen next week, we do know that a 20 mile test is very, very due for the market. Okay. With the upper Bollinger being week 3, if we don't start to see that higher high coming, then that's telling us that the consolidation downward towards the weekly 5 mile is going to start happening, which that means that on the daily time frame, we're going to be heading from this basically slightly above the 5 mile range down to the 20 mile. Okay. Now currently the 5 mile is on my screen, it's at the 7:15:55. I think I have a bunch of moving averages on your screen, which I'm going to take down. Those aren't updated or accurate right now. I do apologize. Those are from like 2 or 3 weeks ago. Um, with that said, okay, the market is going to be making one of two moves. Either we are going to be pushing for that week 3 higher high within the upper Bollinger, which on the daily time frame, that would secure us an additional upper Bollinger push. The upper Bollinger is currently at the 736, so that means we'd be seeing roughly all the way to the 740, okay, if we're aiming to push upward. If not, if we're wanting to start seeing some of this downward consolidation, then we have our 20 mile currently right above or right below the 700 range. So a 20 mile retest over the next week, week and a half is extremely reasonable, seeing how the 20 mile is going to continue pulling upward, pulling above that $700 range, and that gives us, roughly that $20 of downside to harvest. So there's room for some major movements here. I do believe after, tomorrow's trading session, we will have a very large idea of which way the market wants to run. Um, because again, there's basically two very, very distinct moves here. Either we will be pushing for this upper Bollinger on the daily time frame, or we will be pushing to the 20 mile. There's no more room for chopping here because as you can see, we've been chopping on the 5 mile for roughly a week and a half. And we're finally retesting that 10 mile range, having a little bit of a bounce from that 10 mile, which is why I have a little bit of that feeling that we could be pushing up towards that 740 range. Um, but again, this is going to be a very concise and clean move. Either we're going to push up or we're going to pull down to the 20 mile. If we get to the 20 mile, That's when you set up straddles, meaning targeting both the upside and the downside, because that means we're in between the moving or we're in between the Bollinger Bands. That is the perfect time to set up. Now, one thing I wanted to bring up is kind of just the conflict in general, and I'm going to hide the moving averages here, but I want to show this on a few different time frames or a few different charts. Okay, this is basically, let's start the year to date to current. So basically right there. And what has happened from the beginning of the year throughout tech, throughout um SPY, we see a lot of selling, a lot of selling, a lot of selling. Now, when we got that ceasefire news, that's when the market went absolutely crazy, and that was on this candle specifically. Okay, that's when we got that ceasefire news. So I'm just gonna drag that out to that. And ever since then, the market has been on a tear. Okay. Well, what was the market doing prior to this conflict? And let's go back all the way to when President Trump became president again. Okay. We had that massive dip, but from that dip, the market has just been buying and buying and buying and buying and buying. Okay. Um, with that said, with this oil volatility kicking in, a lot of people are really expecting this type of buying to occur. Now, when oil volatility starts to drop, usually this type of move doesn't occur. Usually you have, and let's go back to basically COVID. Okay. Now, a lot of this in this range, yes, it has to do with COVID, but we also had some major oil volatility starting to pick up during this time. So during this time, we basically saw all-time highs. From those all-time highs, we did have the COVID crash. And from the COVID crash, the market did travel back upward. Okay. I am expecting a pretty large pull downward over the oil volatility. Um Whether we see it try to reclaim some crazy gap down here, not really what I'm expecting. Again, I have been expecting a lot closer to that 550, 570-ish range. That might seem completely out of the picture right now. But if you think about how the price action works, we've seen times where the market has traded from the upper Bollinger to the lower Bollinger within a single session. Well, what would that look like currently? The lower Bollinger is all the way at the 660, while the upper Bollinger is at basically the 740. So we've seen those type of sessions happen. Not that I'm expecting that, to occur, but that type of price action can be erased very, very, very quickly. Okay, so don't just assume that just because we're starting to buy again that this is what we're expecting to see. Okay. Now, a few other conditions that I did want to just very, very quickly bring up, and I did kind of want to show this with QQQ as well, is that QQQ since the beginning of the year basically selling off, selling off, selling off. Second, we start getting that news of the ceasefire, it's back to buying again. Um, because that's what it was doing for, quite a long time before that. Um, it was within that buying posture, and prior to this cup fully invalidating right here, we were actually very bullish on the market. We were expecting many of these moves to push into the upper Bollinger. Push into the upper Bollinger, push into the upper Bollinger, and we kept getting upper Bollinger rejections in here, which really started to give us that clue that okay, the market doesn't want upward from here. Something's going on. We're about to head downward. Okay. Now, we're not in that position yet. And one thing I do want to say before we just finish covering everything is that I am still bearish on the market overall. And that might seem silly to some, but um, I do believe there's a lot of conditions that can really drive the market price down quite a bit. And one of them is the Bank of Japan. Okay. Now, I've highlighted these, and I'm actually going to make these red because essentially these were sells into the market. Okay. But Bank of Japan has been having to intervene in the yen, which means that they sell securities, assets, all sorts of stuff, and buy the yen back up. And the reason why they do that is to drive the price of the yen upward, okay, to strengthen the yen. Now, each time they've done this, it's caused massive, massive, massive market sell-offs. And one thing that they do each time prior to these sell-offs is that usually there's oil volatility right before, okay? Or they have to pause until the oil volatility ends. Now, in 2024, there was oil volatility starting to kick off. I forgot exactly what happened, but there was some major event in the Middle East where, that oil volatility started to push upward. The Bank of Japan had to wait until the oil volatility was entirely finished before they can do their unwind. We saw the big unwind of early 2025 with the tariffs, and we were actually starting to see the Bank of Japan beginning to unwind again prior to the war in Iran. I don't know why that's extended that much. It should be back towards February. But you could see that that buying was starting to occur, and we saw this within the treasuries, we saw this within the dollar, we saw this throughout many different instruments that the Bank of Japan was actively trying to buy this up. So what that is telling me is that we have a lot of room here. Okay. We have a lot of room for the Bank of Japan to intervene, and they're going to. I've been watching the unusual whales very, very closely, and they've been pretty much nonstop saying that, they have to focus on the FX portion of the economy. They have to focus on the FX. They have to wait until the war calms down before they can really start to intervene. A lot of that language is already taking place. So, what this is telling us is that the yen is planning to travel upward. For that to occur, stocks have to take a hit. Okay. Um, And let me go ahead and show some of these on the SPY really quick. I did say that this was going to be quicker, but fortunately, I always have something to talk about. So this was one of those unwind events. And this was almost entirely the Bank of Japan unwinding positions. Let's go back to right there. Right here, it may not look like a lot, but that was massive at the time. This was the all-time high of the market, and people were expecting this to continue to fly upward at this point. This selling to the downside doesn't look that grand because of how high the price is right now, but this took us essentially all the way to from the 550. It was actually 560 something at the time, but to the dividends, it's showing 550, and it took us all the way to it says 499. I remember it being around the 507, something like that. So it was like a $50 downside. May not seem like a lot, but in the grand scheme of things, that's massive. That's enough to cause a bear market. Um, or that could be enough to cause a super, super awesome dip buying opportunity. So with that said, we are expecting a Bank of Japan intervention to occur in here. Whether it becomes a super nice dip buying opportunity to continue this, you know, crazy, crazy bull rally, or is it going to be something that's going to break us down further? And I'm not going to go into the whole bear thesis tonight because truly it's not that important right now. We're very far from the market being entirely bearish. Um, I'm not going to try to try to sugarcoat that or anything. We're well above the 200-day moving average. We're well above the 50-day moving average. Yes, we need to do a 20-mile retest. And from that 20-mile retest, that's really going to tell a major story of whether we're going to have, massive selling to the downside or that upward bounce. But again, making this week very, very, very simple. We will either be pushing to that 740 plus range or that upper Bollinger, or we will be consolidating downward towards that roughly 702 range. Okay, so I think that was everything I wanted to cover here. Um, yeah, I think that's gonna be it. Now, again, um, I will be streaming in the morning, so I look forward to seeing you all there. There will be a lot of changes being made to the Discord and everything, and I actually probably will make an individual video going over that. But I do plan to make some of the Discord free again, where a lot of people can just join up for free, seeing the unusual whales information for free. So basically that $1 subscriber um is no longer going to be an option, but I am going to be slightly increasing the price of some of the other subscriptions, but that's because I'm making an AI for not just stock picking, but for very, 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 very precise stock picking. I'm starting the classes back up very, very soon. So that support will offset the $1 sub and it'll allow me to, do everything I need to do. Um, with this AI system and everything, I'm having to dedicate an entire desktop to it, which is like, um, it's like a $2,800 desktop at the time. Probably a lot cheaper now. Well, no, RAM prices are actually absurd right now, so it's probably a lot more. So roughly about a $3,400, $3,600 machine. That's going to be purely used for this AI for building data, for constantly scanning the totality of the market. Um, it's going to be a very unique system that I really don't think many others are going to be able to provide. So I'm very excited about that. I'm very excited to get that worked on and share it all with you. I do expect that to be done closer to the end of June. But again, we will see about that, but it's going to be something I'm working on literally each and every day. So, okay, I'm going to stop rambling. Have a great trading week, everybody. I hope you join the streams in the morning, and I will talk to you in the next one. Take care.